Hello, and welcome to our conversation on financial reporting. The focus of this presentation is to understand the demerger of Vedanta Limited. Vedanta Limited, once again, was in news because of this demerger. But before we get into Vedanta, let us understand what is this demerger. The word demerger um, and observe what has been given under the Companies Act, Income Tax Act, as well as the accounting standard. In the Companies Act, the term demerger is not being defined separately. It has not been explicitly defined anywhere. However, the conceptually, demerger means the transfer of one or more undertakings of a company to another company. The other company is called resulting company. And the company which is demerged it's called demerged company. In pursuant to a scheme of arrangement where the undertaking is transferred as a going concern and the shareholders of the demerged company receive shares in the resultant company. So the resultant company, there is a new company or an existing company where the business is transferred, will issue the shares to the demerged company. Similarly, in the Income Tax Act, the demerger also has been defined by explaining its features. So demerger involves transferring one or more undertakings via court-approved schemes. That is what Income Tax Act says. To be tax neutral, it says it must meet the specific criteria. For example, the transfer of undertaking. All assets and related liabilities of the undertaking must transfer to the resulting company at the book value. That means identify the assets of that particular business and also identify the liabilities and transfer both these assets and liabilities at the book value to the new company. The transfer must occur as a going concern. The business must continue. And there has to be a continuity of the shareholder continuity. The shareholders holding at least 75% in value of the demerged company must become the shareholders of the resultant company. So these are the features of the business restructuring exercise called demerger. As per accounting standards, under Ind AS, the term demerger is not specifically defined once again. However, demerge is generally accounted for under Ind AS 103, which governs the business combinations, mergers, and acquisitions. So key accounting features are the assets and liabilities are transferred at an existing carrying book amount. No new goodwill is generated, and the reserves are preserved. So all these three is telling us that the word demerger has not been defined, but the spirit of demerger, the spinning off, scooping out a business has been explained. So to summarize, the key features of the demerger, the transfer of business divisions or an undertaking, a particular division or a particular unit is converted to a company and transferred. And the transfer happens as a going concern. The business has to continue. The separate company receives the undertaking. The business is transferred to a new company. The shareholders of the original company receive the shares in the resulting company. And this has to be approved through tribunal sanction schemes. Okay. Why demerger? The objectives of there are many objectives, but some of them are, in brief, I'm going to take you through some time to improve the performance, overall performance, or through the process of focusing attention on individual specific business. So you improve the performance by focusing on a particular business. Sometime to reduce the risk, there's a possibility that different businesses are maybe there under one umbrella, but some businesses are more risky. So by demerging, you are removing those risky business and transferring to another unit. It can also be to achieve a strategic expansion to a part of the business which is now in the form of a small unit. So if it is scooped out and demerged, then you would like to expand in that business. Sometime to revival of SICK unit. Unit is not a separate company. Unit is one of the divisions of the company. By scooping it out and demerging it, you put a new company there. So therefore, you make an effort for revival of that SICK unit. In many cases, this is also to do a large amount of financial restructuring, capital restructuring. And that's what happens in most of the cases where the capital structure changes, the debt equity ratio changes. Sometime to enable specialized management because of the business. When a specific business requires some specialized attention, specialized skills and knowledge, it's not a bad idea to scoop it out and transfer it to a separate company. Often, which has been seen, the demerger may also to meet the regulatory compliances, which has happened in power sector. All these, the underlying objective may be to improve the shareholders' value. So demerger is to be seen as a strategic decision, is not a normal, regular accounting decision. It is a strategic decision, and depending on the purpose, the companies design their demerger. For example, some recent demergers, Tata Motors, the commercial vehicle business and passenger vehicle business were separated, demerged. ITC Limited demerged its hotel business into a separate listed entity. Sometimes the entity may be listed or may not be listed, but ITC Hotels demerged happened and converted that into another listed company. And the focus of this presentation is Vedanta's demerger. Vedanta is demerged, converted some of its units into a company and demerged that. And we are going to examine that in detail. Let us take an example. As I mentioned in a power sector, in an integrated company, generation, transmission, distribution, all may be under one company. But we can see that each of these requires specialized knowledge, specialized skills. The risks are different. So therefore, all over the country, these integrated company, power company, energy, electricity company got demerged into Gencos, Transcos, and Discos. The Gencos will take over the generation business. The transmission business will converted into Transcos, and the distribution business will transfer to the distribution companies. So one company got demerged into 3 different companies, sometimes maybe 4 different companies. So this is also called unbundling of the business. Now let us say demerger, the case of Vedanta. But what is this Vedanta Limited? Vedanta Limited, as given in their annual report, is a subsidiary of Vedanta Resources Limited. And Vedanta Resources is owned by the 60% is owned by Anil Agarwal and his family, and that is a unlisted company. And it was a listed company sometime back, but now it is not a listed company. And Vedanta Resources hold 56.3% in Vedanta Limited, which is an Indian company. And there are several divisions of Vedanta Limited. iron ore, sterilite copper, power, aluminium, oil and gas. So we can see that it is it is a combination of several businesses. So therefore, they have large number of subsidiaries in different businesses. So it is a huge company operating in different businesses. Therefore, they decided to go for demerger. But before we go to the demerger, let us observe the financial statements, financial position. And these numbers are from the money control. So last 5 years balance sheet, we can see something interesting. The assets have gone up from 198,000 crore to 233,000 crore. But we can observe that the equity of the company has come down from 65,000 crore to 49,000 crore. So you may ask a question, how is the company financing his assets? The financing of his assets is happening through borrowings, through debts. The equity of the company has gone down. To understand, before we understand why did the equity go down, let us also see the financial performance. Financial performance, we can see that total operating income has gone up from 88,000 crore to 152,000 crore. During the same period, 88,000 crore has gone up to 158,000 crore. EBITDA has gone up from 27,000 crore to 42,000. It's a large company doing well, financially doing well. Its EBITDA margins is more than 27%. The earning per share is 31 and gone up to 50, and now it is around 38.3%. Both return on equity or return on net worth and return on capital employed are positive. So financial performance is looking quite decent for this large company. But we can ask a question here. Despite the consistent profit making, why did the equity go down? The equity has gone down because of the distribution of dividend. And the distribution of dividend, Vedanta is as a strategy has been consistently distribute dividend to the shareholder. So we can see that around 16,000, 37,000, 10,000 crore of huge amount of dividends have been distributed among the shareholder. In fact, Vedanta is one of the largest dividend distributing company. But where is this money going? In the last 4 years, out of around 81,000 crores, 81,000 crore dividend has been distributed. Out of that, 45,000 crore has gone to the parent company. So the reduction in equity is not because of not because of the losses, but because of the distribution of dividend among the shareholder. And before 21, there was also buyback. So consistently, the parent company has been taking money from this profit-making company. And during these 5 to 6 years, the improved performance, we are able to see that consistently profit-making company, consistently ROEs and ROC improving because of several strategic decisions taken by the company. So over the last 6-7 years, Vedanta Limited adopted several important financial strategies to improve liquidity, to manage debt, to increase the shareholders' return, and support expansion. And those strategies are shifting to bonds. As we have seen, the liabilities have been increasing, bond financing, the loan financing has been happening. The company as a strategy has been high dividend distribution strategy. the company has been distributing dividend among the shareholders. And they've also made an effort to monetize assets. Those assets which are not core, which are not important, not relevant immediately, they've been converted into cash. They also made an effort, the company made an effort for delisting, though it did not succeed. And now the company is going for demerger. So consistently over the years, the management of Vedanta has been undertaking very important strategic decisions with an objective of improving the overall performance, improving the shareholders' return, um, and one such decision is the demerger. It was announced in 2023, but now it has been put into action. What is demerger? Why did Vedanta go for demerger? As we have already seen, Vedanta Indus Limited is a diversified natural resource company engaged in the business of extraction, refining, manufacture, sale of various metals and minerals, also in generation and sale of power, and other businesses like semiconductor manufacturing, glass manufacturing, etc. Varieties of business. And these interests in multiple business, metals, mining, exploration, natural resources, power generation, iron ore, they're all from different industries also. And these businesses are having different risks. The nature of the risk and competition involved in each of these businesses, financial profiles and returns are distinct from others. They're not a homogeneous group of industry. Consequently, each of the above mentioned business undertaking is capable of attracting different set of investors, lenders, strategic partners, and other stakeholders. The manner of handling and management of each of these above mentioned is distinct. So it is a large company into different types of businesses, into different type of products, into different market. So therefore, the company felt in order to lend, enhance, focus on the operations of identified businesses, Vedanta Limited decides to segregate and organize these businesses as separate entities through demerger. So it is in order to manage each business with a specific specialized management team with a focus of maximizing the shareholders' return, the company decided to go for demerger. And what did they do then? The Vedanta Limited, the demerged company, initially they had a plan to make it 5. They demerged now 4 companies: Vedanta Aluminium, Vedanta Power, Vedanta Oil and Gas, and Iron and Steel. And we can see that each one of these 4 have different cost drivers, different profit drivers, different management capabilities are required. Therefore, the Vedanta Limited demerged. One company become 5 companies now from this, because of this demerger exercise. And these companies are called resulting companies for the vocabulary point of view. What is the consideration? The existing shareholders of demerged company will get the shares from these companies. So that's what we call consideration. The demerger will be executed as a simple vertical split, as if you're drawing lines. For every 1 share of Vedanta Limited, the shareholder will receive 1 share on each of the 4 listed companies. That means if you are holding 1 share here, so post demerger, you'll have 5 shares, 1 here and 1 in each of these 4 resulting companies. Well, the residual Vedanta entity will continue to remain as a listed and will house key businesses including zinc, international, copper, ferrochrome, and many others. So every shareholder will get one share of the new company. So what will be the impact on the share price? That was the major concern. Will the market behave positively or negatively? That we will see later. What is the immediate effect? So on 30th April 2026, the share price of Vedanta Limited closed approximately as 271. But to understand 271, it is always important to see what was the previous price. The previous price was 770. So 271 immediately after the demerger, and previous to the demerger, prior to that is 77. So this fall, is it a market fall? The answer is no. The sharp fall from 770 to 271 was mainly due to the adjustment. And that adjustment is called demerger adjustment. 770 is for Vedanta with all these four in this. Now this assets belonging to aluminium, power, oil, and iron and steel will be transferred from Vedanta Limited to the balance sheet of these four companies. So the assets of Vedanta Limited will reduce to the extent of the assets of aluminium, Vedanta, oil, and iron. So as a result, the net assets, the book value of the assets, book value per share of these Vedanta Limited will come down. No wonder the price has to adjust. So the fall in the price from 770 to 271 was mainly due to the Vedanta's demerger adjustment. This is not a market crash. Let us take a small example to understand. Suppose Miss A holds 100 Vedanta shares before demerger. Post demerger, she will get 100 shares of aluminium, 100 shares of power, 100 shares of oil and gas, and 100 shares of the iron ore. And the price before we already saw 770 approximately, and price after is 271. So the value in the hand of Miss A before demerger is 100 into 770, 77,000. But value after demerger is 100 into 270 of the parent of that the demerged company plus the 400 shares into price. We don't know the price yet. They're not yet listed. So there is every possibility 100 into 270 plus 400 into X will be higher than 77,000. So we have to keep a watch on this. Because of this concept of conglomerate discount, let me elaborate that. The conglomerate discount is a situation where the market values a diversified company at less than the combined value of individual parts. Conglomerate discount is a situation where the market values a diversified company together at less than the combined value of the individual parts. Let us see this. Suppose a company has three divisions: software, retail business, and media. The worth of software is 50 million, retail is 30 million, media is 20 million. So individually they add up to 100 million. But the investors may value the entire conglomerate at 80 million. So this 20, 100 minus 80 is called conglomerate discount. So there is an expectation that the value of Vedanta as a conglomerate is not reflecting the value of individual businesses. So there is every possibility with the demerger, this conglomerate discount will unwind. Unwind means the discount will slowly get wiped off. As a result, individual businesses will be valued, and the summation of that will be higher than the previous value of the conglomerate. However, there are several apprehensions. The intention seems to be as projected, as presented in the newspapers, investors meet, seems to be positive. But as a potential investor or a researcher, we should also be aware of the apprehensions. Number one apprehension is a bit of accounting and finance there. The assets can be identified with each business. One point of an issue which will crop up for this type of situation is the debt allocation. Vedanta has a high consolidated debt. How will this debt be distributed among the demerged companies? Is a question. Strong businesses like aluminium may carry disproportionate debt. Weak businesses may struggle to post separations. So therefore, debt management, debt accounting, debt reporting will pose some questions. Each new entity will be a pure commodity business. Oil, aluminium, power, zinc will be pure commodity businesses. And the commodity businesses are highly volatile because of the price fluctuation. Earnings may swing sharply with the global prices. So instead of diversification benefits, there is an apprehension that the investors may face higher individual risk. Okay. Sustainability of dividend. The parent company, a conglomerate, is to follow huge amount of the dividend distribution. We have already seen that. Every year, the company Vedanta Limited is to distribute dividend. So Vedanta has historically paid very high dividends. So the apprehension is, will each separate entity continue such payouts? Or whether dividends supported by the group level cash pooling? Is it possible that the cushion which was available as a group will not be available at the company level? So sustainability of dividend is another concern. Similarly, handling such a large companies, large demerger with different businesses is not going to be easy. Creating 5 listed companies or rather 4 listed companies, including the demerged one, 5, are operationally complex. Asset transfer delays, regulatory approvals, valuations, the debt management, debt reporting, all this create the regulatory uncertainties, difficulties in completing and closing the deals, opening the balance sheets, and any of these delays may impact the investors' confidence. But these are all apprehensions. So, going forward, the demerger is complete. But will value creation follow? Only time will tell. So let us keep a watch on this company, observe the new companies which are coming up, and let us observe the response of the market. Let us see the fundamentals of these companies and hope that it will not disappoint the existing and potential shareholders. Thank you very much.